Hey everyone. So it looks like the parade continues. The parade meaning the move higher in defiance of my expectations. But I'll tell you what, I've been doing this for a long time. I spent 2 decades in the institutional trading world, traded for some of the best people there are, and best money managers there are in history, Mario Gabelli, Stephen Cohen. So I've been around the block a bunch of times when it comes to trading. And I learned a long time ago that sometimes you just can't try to figure stuff out. You just gotta go with the flow. The market is about people. Okay, people can be irrational. People can do crazy things. People can do silly things. So something like this, where the market seems to be moving higher and higher and higher in defiance of conventional wisdom, well, you know what? You just stick with it. You just stick with it. But that being said, be ready for a reversal because it will come eventually. It could be tomorrow, it could be in 2 weeks. Markets just don't go straight up. There's going to be some kind of profit taking, but be ready because when the turn comes, I think it's going to come pretty quickly. Now, as we all know, well, actually, here's S&P. So nice move today, up 80 basis points. So I think when that turn eventually comes, you're going to get a really clear signal over here. Now, this is the semiconductor industry ETF. It's not a sector, it's an industry. It's part of the technology sector. But everyone, including your grandma and your Aunt Mary, assuming you have a grandma and Aunt Mary, I think I had two Aunt Marys. Yeah, I did actually. Uh, they know about the Magnificent Seven. Well, this is it. This is the ETF of the Magnificent Seven stocks. Well, not all of them, but for the most part, this is what's led the market higher. Now, notice how we got this reversal action up here. When I say reversal, it means the blue team is in charge here. The blue team, the bulls, are pushing us higher. When the market turns, it's when the red team takes over and they start pushing the market lower. As traders, this is what we want to look for, things that are changing trends. Now, notice how over the last week, this red line here is $188, and we closed at 190 and a half. It's been support. Okay. What happens is people sell and then the price goes higher and they say, damn, I shouldn't have sold. If it comes back to my price level that I sold at, I'm going to buy my shares back. So you get remorseful sellers placing buy orders at the level that was previously support. And that can keep support intact for a while. Now, as you can see today, we got down there, we tested it, and we ended up rallying. Sometimes you rally off of support. Support is a large group or a price level where there's a large group of buyers or traders or investors or who are willing to buy. I said buyers, but traders, investors are willing to buy. Sometimes they start to get a sense, oh, there are other buyers coming into the market. That's why the price isn't going any lower. And they start to think like, boy, someone's going to jump ahead of me. So I better raise the price I'm willing to pay. And other traders see that and it starts this snowball effect. Anyway, keeping a real close eye on this here. Now, one of the things I teach people is don't try to catch the top, don't try to catch the bottom. You're not going to be able to do it. No one can, except for people that lie. Or, that's an old Wall Street quote. The only people that can catch the bottom or the top are liars. So what we do is you wait. And if this support breaks, meaning if the price goes below it, if the price goes below it, it'll show us that those buyers who created the support are done. They left the market or they finished their orders, they canceled their orders. But that's when you pull the trigger. You wait for the trend to start and then you jump in. Okay, the other thing I want to really pay attention to is in the financial sector, tech and financials have been doing well. But tech, as we've seen, could be kind of reversing or ready for reversal. The financials are getting pretty overbought. Other than that, other sectors, industrials, consumer discretionary, they're all kind of neutral to going lower. Now, this is overbought. That means it's really overextended. It's above what would be its typical or usual trading range. That's going to draw sellers into the market because they're going to be anticipating a reversal. Now, when we look at a sector, this is the sector ETF, just like the SPY is the spider for the S&P 500. XLF is the spider for the sector. S&P has 11 sectors, and financials are one of them. And we can come up here. I just say come up because Boston is north of me, and this company, State Street Global Advisors, is in Boston. But if you go to the holdings, you can see, all right, look at this. Of the sector, Berkshire Hathaway is 13%. JP Morgan is 9%. These two companies really kind of dominate this. You go down to Morgan Stanley, it's only 2%. So if you watch what these companies or these guys are doing, you can get an idea of what the sector is doing. And if you watch what the sector is doing, you can get an idea of what the SPY is doing. All right, so let me just check this out real quick before I go, but hopefully you will all come back because, like I said, I've been saying sometimes the markets were quiet, and I've been saying that for a while, but here there are going to be some trading opportunities. So there's Berkshire Hathaway. Look how overextended it is. So if this starts to reverse, that's could put the pressure on the sector to go lower. And like I said, it could be a chain reaction. Before I go, I just want to point out natural gas here. Now, before you say, well, I don't trade futures, well, you don't need to. There are ETFs you can trade. Look at this drop this thing has had. Fell like 20% yesterday. Well, actually today. Remember, these are futures. So wherever this is at some part of the world, it's Tuesday now, but over here it's still Monday. Anyway, $2 has been in support. Like I said before, levels that were support tend to be support again because remorseful sellers are trying to buy things back. Levels that support, there tends to be rallies off of them because some of the traders look around and say, wow, there's other buyers here. I better increase the price I'm willing to pay. That starts a snowball effect, and it could force the uptrend. Now, if you don't trade natural gas, you could come over here and just take a look at UNG. It's an ETF that's designed to track the price of natural gas. So it looks different than the natural gas chart, and that's because this is only traded from 9:30 to 4 Eastern time, whereas natural gas trades 24/7. But if you want to get exposure, this is a really good vehicle to do so. Okay, everybody. Thanks, and hope to see you back here tomorrow. It's going to be a lot going on. A lot of opportunities for profit. Okay, see you then.